Hello everybody, my name is Kate Olaf and welcome to my channel. In this video, I am going to take it back to the main goal of this channel, which is to simplify finance. I am going to share with you the 8 simple steps that you need to take in order to open a bank account. Now, if you're over the age of 18 already, chances are you probably don't really need this video, but stay tuned because you might learn something that you didn't know. So without further ado, let's get into the first step. So the first step when opening a bank account is to simply choose a bank or credit union. Keep in mind that there are 3 basic financial institutions to choose from. You have banks, credit unions, and then online banks or credit unions. Now, depending on your needs, which I'm guessing if you're watching this video, it's probably just to open a checkings or savings account, then you might want an online bank versus a credit union. Make sure when you're researching your different options, you know what your needs are. For instance, if you don't need customer support because you won't be physically visiting your bank, an online banking system might be your better option for you. Now, how do you know which institution is the best? Well, the easiest way to figure it out is by simply asking the people around you. If your parents use Wells Fargo, ask them why they do. If your friends use Chase Bank, ask them why they like that. Chances are that if the people in your life trust a business enough to recommend them to you, they're probably pretty good. And please make sure that you research each company's fees. The reality is that all these different financial institutions are businesses, and so you want to research all their fees. You want to make sure that you're banking with a legitimate company that's not in the business of just ripping people off. The second step is to visit the bank branch. Now, you can visit the establishment you've chosen by either going to their physical store or just by looking up their website online. Either way, you're going to have 4 items available when you go to the bank in order to open an account. And these 4 things are your government issued ID, your social security number, your mailing and physical address, and an initial deposit if it's required. If you have all 4 of these things when you go to visit the bank, it's going to make it much easier to open an account with them. Step number 3 is probably the most fun step when opening a bank account, and that is to choose the product that you want. Depending on the financial institution you choose, you may have a variety of accounts that you can pick. You could open a checking account, which is used to receive direct deposits and make payments. Take note, if this is your first time opening a bank account, chances are you're going to be opening a checking account. You could also open up a savings account, which allows you to earn interest. If you open up a savings account, make sure to check the amount of interest that you earn within that savings account. And also ask the bank teller if they offer any other kinds of products where you could possibly earn more interest. You could open a money market account, which sometimes gives you more interest than a savings account would. You can purchase certificates of deposit, or CDs for short. CDs can earn you a lot more interest than a savings account would, but they may lock up your money for a longer period of time. This means that depending on the CD, you would not have access to your money like you would in a checkings account. Or lastly, you could apply for a loan from the bank. This could range anywhere from a car loan to a personal loan. Now, again, I'm going to repeat myself, but make sure that you research and ask the bank specifically what kind of fees they have when you're opening certain accounts. On to step number 4, which is to provide your information. Remember in the second step when I said you had to have all 4 of those items with you? Well, this is where it comes into play. As you open your new account, the bank is going to ask you to provide all 4 of those items. They may ask you to provide some other things, but nothing major. The more prepared you are going in, the easier the whole process will be. Step number 5 really isn't a step at all, more like a tip. Just note that many banks will check your credit when you're applying for an account. Now, they may or may not. It really just depends on the institution that you use. But know that if they do pull your credit, it will most likely be a soft pull, so chances that it hurts your credit score are unlikely. Again, make sure to do your research or ask the bank to see if that is something that they require. Step number 6 is going to be very important for everyone under the age of 18. Step number 6 is to consent to the terms. When opening an account with any establishment, you're going to have to agree to their terms and conditions. This is why I tell you to research their terms and conditions. That way you know what you're getting yourself into. Now, why did I say this step was important if you're under the age of 18? Well, because if you're 17 or younger, you're going to need someone over the age of 18 in order to open an account. Chances are your account will be labeled teen account. So banks need to see that an adult is on the account with you. Now, what if you're over the age of 18 and you want to open an account with someone who is also over the age of 18? Well, then you could open what is called a joint account. Joint accounts are exactly what they sound like. They simply allow two people to have access to it. If you are in need of this type of account, take note that the bank is going to need a signature and documentation from every account holder. Step number 7 may only apply to online bankers. Step number 7 is to print, sign, and mail. Some online banks may require you to fill out some of their documentation online, print it out, and mail it to them. Again, if you're an online banking type person, this may apply, so do your research as needed. Step number 8 is to fund your account. Most likely, if you're opening a checking or savings account, you're going to be required to make an initial deposit. Now, there are a couple different ways you can go about this. You can deposit cash, you can deposit a check, you can transfer funds electronically, or you can do direct deposit with your employer. And I hope that the reason you're opening up a bank account is because you have money lying around and you need to put money into it. Because if you're opening a bank account and you really don't have any money to put into it, that just makes no sense. So you can deposit your money any of those 4 ways, and it really doesn't matter which one you use. Now, before I end this video, I'd like to briefly go over something really important that you should know. And that's the purpose of the FDIC and the NCUA agencies. Chances are, if you've ever been to a bank, you've probably seen a sign in the corner or up on the desk that says FDIC insured. Well, the acronym FDIC stands for Federal Deposit Insurance Corporation, which means it's an agency created by Congress to help maintain stability and public support when it comes to the nation's financial system. So to simplify, let me tell you the story of how the FDIC came to be. If you know your history, then you know that the failure of banks in the 1930s led to the Great Depression. As the economy was on its way down, people lost hope in banks, and so they went there to withdraw all their money. Well, when thousands of people go at the same time to withdraw all their money from a bank, you're gonna run into a problem. See, banks don't have millions of dollars in cash just sitting in a back room available. They typically only hold a fraction of deposits at any one time. Banks lend out the rest of the money to borrowers, or they purchase interest-bearing assets like government securities. So just know that when you deposit cash into the bank, they don't just have a little box in the back room with your name on it full of all your cash. The money that you see available in your bank account is actually money that's being circulated within the bank, making the bank more money. So anyway, all this to say that back in the 1930s, when people were making these bank runs withdrawing all their money, at some point, the banks had no more money to give. This would result in banks failing and people losing all their money, and ultimately leading to the Great Depression. So, what does FDIC have to do with any of this? Well, it was created in 1933 to ensure that all money deposited was safe when banks fail. Typically, the FDIC insures deposits of up to $250,000 per customer. Now, this does not mean you get $250,000 if you only had a couple dollars in your bank account when it failed. The FDIC will only match your deposits up to $250,000. Now, there are a couple more rules and regulations that go over the specifics, but all you need to know is that if your bank is FDIC insured, then your money is safe. And what about the NCUA? Well, it's pretty much the same thing, except that it covers credit unions and not banks. So when you go to open an account, make sure that the establishment is either FDIC insured or NCUA insured, because that would suck if the establishment failed and you lost all of your money. I know I went over a lot in this video, so if you want to check out the 8 simple steps to open a bank account, I will leave them in the description below. So that's going to do it for this video. Make sure to like, comment, subscribe, hit the notification bell when you subscribe. That way you don't miss out on any of my new videos. If you don't follow me on my socials, you can find me at Kate Olaf everywhere. And as always, I'm Kate Olaf, and I will see you in the next one.